Χαίρετε! Σήμερα το θέμα συζήτησης είναι να δούμε με ποιον τρόπο λειτουργούν οι εναλλακτικοί τρόποι επένδυσης και ποια τα πλεονεκτήματά τους όταν έρθουν σε σύγκριση με τους παραδοσιακούς τρόπους. Καλεσμένος σήμερα του κύριου Κώστα Kyamide είναι ο κύριος Jeremy Friel, ιδρυτής και διευθύνων σύμβουλος της Belmont Investments, η οποία ασχολείται με εναλλακτικές επενδύσεις. Να τονίσουμε ότι η παρουσίαση είναι πληροφοριακού χαρακτήρα και δεν αποτελεί πρόταση για επένδυση. Ας καλωσορίσουμε λοιπόν τον κύριο Friel, ο οποίος ήρθε από τη Νέα Υόρκη ειδικά για τη συνέντευξη. Hello! Today we discuss the subject of alternative investments which give an option over straightforward investments in bonds and shares. Guest of Mr. Kostas Kyamides for today is Mr. Jeremy Friel, founder and managing director of Belmont Investments. We would like to point out that this presentation is informative and does not constitute a proposal for investment. So let's welcome Mr. Friel, who came from New York especially for this interview.
Γεια σας. I would like to welcome my friend who came all the way from New York to Cyprus to be with us and speak with me on Kyamides Money Honey. His name is Jeremy Friel and he's the founder and managing director of Belmont Investments, a specialist in alternative investments, and of course this is designed to be for information only and not to try and attract attention for investment. Jeremy, welcome to Cyprus.
Thank you very much, Kostas. It's a great pleasure to be here again. Thank you.
So, when you say specialist in alternative investments,
yes,
and quite successful from what I see and judging by the various people that come to you for advice.
Sure.
What do you mean by alternative investments?
It's a good question. First of all, what it's not is alternative assets. And what I mean by that is we're still participating in markets that would be familiar to most people, namely fixed income, equities, currencies, and so on. But where we differ from traditional investments is that we're not long only. Now, long only simply means that you buy stocks or you buy bonds and you hold them. And the idea being that over long periods of time, equity markets and bond markets and real estate markets rise.
Depending on your age, it's a good idea.
Yes, absolutely. And it's been very successful. But what we do is we seek to benefit from volatility in the short term or shorter term, such that as well as taking long positions, we're also taking short positions. So what I always say to somebody who's asking me what a hedge fund does versus a traditional investment, a traditional investment manager, he or she will look at equity markets and think, well, which are the stocks that I really like? So which 50 stocks do I really want to own? And then they will take long positions. They will buy those 50 stocks and hold them.
And try and beat the index,
well,
which is very difficult because the best companies supposedly are in the index of the country. That's
right.
where your skill comes in.
Well, our skill is a little bit different in that as well as buying what we like, we sell what we don't like. So we go short.
Yes.
So one of the challenges with traditional investing is that if one feels that equity markets are going to fall, there's not much that you can do other than just brace yourself and accept the fall. Whereas what a hedge fund manager would say is, well, why not go short? Meaning take a position whereby you benefit if that stock falls. So let's say, for example, let's be very topical and look at something like Nvidia.
Yes.
Which shot up another 8 or 9%,
yes.
and it's trading at incredible levels. Well, a lot of people would look at Nvidia today and say it's overvalued. It's too expensive. It couldn't possibly justify this valuation. And therefore, an alternative investment manager, hedge fund manager, might say, you know what, I'm going to take a short position in Nvidia. And that way I'll benefit if Nvidia falls. So generally speaking, alternative investments, as you described them, Kostas, is we're not necessarily using different instruments or different markets. We're just interacting with them in a very different way, which is long and short. And really the phrase hedge fund stems from the idea that you're hedged if you're long and short at the same time. So let's take a pair like Coke and Pepsi, right? So two very similar products, two very similar companies. If you're long Coke but short Pepsi, you're not really exposed to the equity market, nor are you exposed to the cola market. What you are exposed to is the performance of one versus the other. And so hedge fund management is really much more about that. It's about exploiting value differentials between similar securities rather than taking a view in the market overall. But what you have there, the advantage is that the gains and the losses that we make on a daily, weekly, monthly basis tend to occur at different times to the losses and gains experienced in traditional investing. So it makes for a nice diversifier. And ultimately the goal of what we do is to help people diversify away from their traditional investments.
I see. And being in New York, do you deal mostly with US denominated securities, or do you use other currencies as well?
Yes and no. We don't have a kind of a dogmatic bias towards the United States just because we're there. I'm from Ireland, and many of our staff are from different places. But what you find is that managers like us, investors like us, we're very much drawn to liquidity. So where there is liquidity, there's room for us to participate. It just so happens that most of the liquidity in financial markets is in the United States. So for example, if we look at the equity markets, last I looked, the S&P 500 has a total market cap, I think, of about $35 trillion. That's an enormous number. And that dwarfs any other index around the world. If I was to, and again, Costas, forgive me, I'm guessing, but I would guess that roughly half of all equity market capitalization in the world is in North America.
Yes.
And so we're not attracted to America per se, we're attracted to liquidity,
Yes.
to size.
Talking about liquidity,
Yeah,
quantitative easing
yes.
started about 15 years ago
Yes.
throughout the world.
Yeah,
33 trillion so far have been injected to the economies.
yeah,
And we see a strange phenomenon. The idea was that it will give liquidity, that you mentioned liquidity, to the economy, the real economy.
Yeah.
Instead of that, we see that the money went to the banks.
yes.
The banks mostly made loans to property companies, so the
Yes.
valuations of properties went up,
Yeah.
and to companies,
Yeah,
big companies whose shares went up.
Yeah.
The idea being that the owners of the shares, when
Yeah.
they go up, they will sell and buy in the real economy. Of
Yeah.
course, it never happened because things are so good. They sold, made profit, and bought back other shares. So are you worried about this liquidity that you mentioned and the size of the growth of the markets? And many things to worry
Yeah.
about. You'll tell me the
Yeah.
interest rates of US dollars are there.
sure.
Cause the collapse of a few banks,
Yes.
not only in the States but also in Switzerland and elsewhere,
Yeah.
because these banks, they were governed by rather younger people who didn't know that interest rates can go up as well.
Yeah,
So they put their investments into government bonds
Yeah.
with very low yields, and interest rates shot up. The valuations of the bonds fell, part of the capital, and they had to regain their capital, and that's why they failed. They fell. They couldn't bring back the capital to the level required because of this high interest rates rise. Very many considerations
Yeah.
for you to consider when you make decisions.
Yeah, let me start with the quantitative
Yes.
easing first. And I have to say, I don't wish to sound too political,
Yes.
but certainly I have very strong opinions of this. I think that you're absolutely correct in saying that the 33 trillion, the net effect overall was to make the wealthy wealthier through ownership of property and other assets. Now, I salute the central banks of the day because I think they did the best that they could. Now, what I mean is that the true solution to what happened in 2008 was fiscal policy, not monetary policy. My concern and my anger very much at the time as an Irish person, and you and I have talked about this
Yes.
as an Irish guy and a Cypriot guy, and what it did to our respective countries. The answer was fiscal policy, meaning taking from the wealthy and putting it into the bottom of the economy. What they did instead was they deferred to monetary policy, which does the very reverse. It sprinkles money into the top of an economy in the hope that it trickles down. Now, I have long believed that trickle-down economics is nonsense. It has never worked. It will never work. Trickle-down economics depends on the thesis that a very wealthy man and a homeless man on the street, if you give them both $100, that the wealthy man will spend the money quicker. That's nonsense.
Yeah.
The homeless guy will spend it immediately on a new pair of shoes and a meal.
Yes.
So the entire thesis around quantitative easing, I believe, was false, but I don't blame the central banks because that's all they could do.
Yes.
So that's the first point. The second, and sorry, you're absolutely correct in saying that quantitative easing has created, in my view, a very false inflation of an awful lot of assets. Now, it's so interesting to think about quantitative easing and its relationship to interest rates. And you can almost think of quantitative easing as negative interest rates. You can think of it in those terms. Certainly, there has come a point now in the last 2 or 3 years where interest rates have had to rise. And for example, in the US, we've gone from 0 to 5.25. To me, there are two risks to equity markets and asset markets globally. One is the end of quantitative easing, and two is the re-emergence of interest rates. Now, you might look at me, Costas, and say, well, aren't they one and the same? Aren't they related? They're very close first cousins. There's no doubt about that. They are very close first cousins. But certainly, I feel very strongly that so much of asset valuation, whether it's real estate, fixed income, equity, whatever, I feel they're trading at very high valuations on the premise that zero interest rates is more normal than where we are today. And I strongly disagree with that. And what I mean by that is I'm 52 years of age. I was born in 1971. I started my career in 1996. Somebody wise man told me once that we all view as normal the level of interest rates that was prevailing the day we started our career. And I think that's a very smart way of looking at it, because I started my career in 1996 when US rates were about 6%. So to me, 6% is still normal. Now, where we are now, for example, does not seem absurdly high, not at all. But I do hear a lot of younger people, particularly 40, 35, 30 years of age, and by 35, you've risen to a fairly decent place in an organization. But the typical 35-year-old I talk about will ask me, well, when do you think rates will go back to normal? And I look at that person and think, what are they talking about? I mean, this is where we are is pretty normal. Yeah. And what they mean is, when can we get back to zero? In my opinion, we are never going back to zero. And in 3,000 years of whatever data we have on interest rates, there has never been a period where we've had an extended spell of zero interest rates. There have been very short periods of maybe, a quarter or two, yes. Not 10, 12. That has never happened before. And again, that relates back to what I said before, that I feel it was a deliberate passing of the responsibility from fiscal policymakers to monetary policymakers. And that is a piper that still has to be paid.
Yes, and of course, we all know that the US dollar really controls the world. Most things around us are denominated in dollars.
Sure.
Now, certain countries,
yeah.
the ASEAN,
yeah.
have decided, and it has been confirmed, to stop using the dollar for their trading activities and use their own currencies.
Sure.
Is that going to affect the strength of the dollar? Should. But okay, we have high interest.
Yeah.
We say the high interest stay where they are for some time, but we see many countries going away from the dollar. We see China buying a lot of gold.
Yeah.
We know that since 1971, when President Nixon threw out the gold standard, it's the fiat currency. If you have a strong economy, you have a strong currency.
Yeah.
But now this, some people call Ponzi scheme, the quantitative easing, putting money, but how long can you keep putting money in the economy? You cannot, because look what has been created. The real economy is not developing. There are many considerations. I mean, I'm not saying I feel sorry for you, because I know your funds perform well, but it's interesting, isn't it, the world we live in?
Yeah, I think that the move away from the US dollar is a threat or a risk that I've been hearing about for 25 years. It hasn't happened. I was on a currency trading desk January 1st, 1999, when the euro was introduced.
Yes.
And we all thought that the euro would take over the US dollar as the currency of choice. It hasn't. There has, for example, recently been a move by China, by Iran, by certain other countries to try and have certain commodities priced in non-dollar currencies.
Yes.
The challenge is, it's not something that you can just mandate overnight. It's almost like the way English is the global language.
Yes.
So, for example, if a diplomat from Cyprus, well, that's a bad example because everybody speaks English here, a diplomat from Bolivia who only speaks Spanish,
yes,
and he wants to go do business in India with people who only speak Hindi. Generally speaking, because Spanish Hindi speakers are quite a rare combination,
yes,
they'll do business through English. English is the lingua franca, should we say. The US dollar is kind of the same, in that every country around the world that I can think of, or many countries around the world, will have their fixed income, for example, denominated in local and in dollars. And so dollars becomes like English. It's kind of a currency of common conversion that every country in the world can use. Now, to say that we're going to change that to the yuan or to the euro or to the ruble or to who knows what, it's a very difficult thing to do culturally. It'll take decades to do culturally. So even though I think people like the Chinese would like to do it, it's going to be very difficult for them. And the reason they want to do it is very clear. What the Americans have is a huge advantage because of the strength of the dollar. The strength is the wrong word. The acceptance of the dollar.
Because they have the military power.
Yes, but what I mean is that imagine the risk for America if every commodity was priced in something other than dollars. Now all of a sudden, the American people earn dollars, right? But if they need to buy copper, cotton, cocoa, oil, aluminum, whatever they need to buy, and if those things that they need to buy are priced in a different currency, that's a huge basis risk.
Yes.
So, and that's a level of inflation that the American government and the central bank would never be able to control.
Yes.
So having the world denominated in your currency and having the world's commodities priced in your own currency, it's a huge strategic advantage. Now, I think what you alluded to is correct in that you cannot maintain a currency's power and acceptance without a certain amount of political, military, and economic strength.
Yes.
Unless you're not a fiat currency, but everybody's a fiat currency.
Everybody's a fiat currency.
Everybody's a fiat
but
currency.
That's about to go soon, I understand.
Well, why do you say that?
The reason I say that is, I mentioned before, it's beginning to look like a big Ponzi scheme, what has been happening with the quantitative easing.
Yeah.
You cannot...
You can't do it forever.
Yeah, you cannot do it forever.
You can't do it forever. But
whether you are a bank that you can create money without having it, or whether you are a country that a Federal Reserve that you can create money at will. During the COVID period, the President of the United States and the British Prime Minister instructed the Federal Reserve and the Central Bank, push a button, make so much money and put it in the bank accounts of the people, because for a few months they are not going to have any income. Well,
and that caused equity markets to. What's so interesting there is that they're constantly playing a game of cards with the global markets. They will keep doing it until they feel that global markets don't believe them anymore. So it's a game of chicken.
Yes.
It's a confidence game.
Yes.
And I think that where central banks and elected governments are in opposition to each other, is that elected governments would do it forever.
Yes.
Why not just give everybody loads of money? Whereas the federal banks, or the Federal Reserve and central banks, are saying, no, our job is to safeguard the confidence in this system. We're the ones now saying, no more, you can't do this anymore.
Yes.
And so that the democratic process and the central banking process are sometimes at loggerheads with each other.
Yes.
But certainly I feel that the Americans, the Japanese, the Europeans, the British, they have pushed it as far as they can, and they've got to be very careful about how much further they push it, and they know that. And the reason I say that is that one of the consequences, I think, of all this quantitative easing is that when you suppress economic risk, you generally only create another form of risk, like political risk.
Yes.
So, for example, in my opinion, and it's only my opinion, neither Brexit nor Trump would have happened if it wasn't for quantitative easing. Because in my opinion, what quantitative easing did, it widened the gap between poor and rich. And again, it wasn't a case of evil central bankers saying, how do we make the rich richer? They did this because they thought it was the best tool to stabilize the global economy. But one of the unintended consequences, as you alluded to, Costas, was that property valuation and asset valuation, capital, as Karl Marx would say, capital went up,
yes,
whilst labor didn't.
Yes.
And that gap between capital and labor is largely what caused the election of Donald Trump, Brexit, and so on. I think that political volatility, political unrest happens when men and women are not happy with what they have. And the response to the global financial crisis was a difficult response. It was difficult to come up with an answer, and everybody was trying to figure their way through it. But what they did undoubtedly made the wealthy wealthier.
Yes.
And we still see that to this day.
Yes, and since you mentioned Donald Trump,
Yeah.
4 months ago, I saw him on the news saying, I think he was in California, saying to people, if I am re-elected, I will not allow the evolution of the central bank digital dollar.
Right.
I will not allow it.
Yeah.
Now, that's something that I wonder whether it can be stopped, because all over the world, because these Bitcoin and cryptocurrencies are taking more and more part of the liquidity, which reduces the power of the central banks. They cannot do a monetary policy, and it's growing all the time. SWIFT have created, they are about to complete a platform to accommodate central bank digital currencies for the transfers. It started in the European Union, it started everywhere in the world. In some countries it is completed. Are you worried that the evolution of the central bank digital dollar and generally the central bank digital currencies will affect the banking system to such an extent which will affect the rest of the economy, that you will need to consider new policies in your management of funds?
I'm not worried. Again, and I want to refer back to what I said before, we're not worried by equities going up or down, or markets going up or down, because we're hedged. We're worried about poor decisions that we make, but that's independent from equity markets going up or down. The question you just asked me there's a few things to break down there. Firstly, if I may be so bold, I would humbly submit that Donald Trump doesn't know what he's talking about. When it comes to digital currencies, I don't think he knows what he's talking about in relation to economics in general, but that's a different point.
He was talking to a Spanish audience.
I remember Univision, look, Donald Trump says the last thing he heard from the person he just spoke to, so he doesn't have particularly well-formed opinions. Now, let's go on to the idea of digital currencies. There are two facts to consider here. One is that the older forms of currency that is in your and my pockets, in the form of cash and credit cards, or cards of some kind, it's very old technology, Costas. And it's not very good, meaning that it can get stolen, it can get lost, it can get, what's the word I'm looking for? Somebody can watch me punching in my numbers at an ATM and steal those numbers. It can be corrupted. So we have to think of something better than credit cards and cash, whether that's biometric or, I don't know. But certainly the move towards a digital form of payment is one that I encourage. Now, that's a very different thing from Bitcoin.
Yes.
Because Bitcoin to me it's a religion, it's a cult. It's
a private digital currency. We're going to have a central bank digital currency, which is a government control.
Right, but I'm all in favor of a government-controlled digital currency.
Yes.
Because we know...
And it's going to happen.
I think so.
Yeah, central bank digital currency.
I don't know when, but I think so. There should be no reason in the world where you and I shouldn't be able to control our spending through our eye or our fingerprint.
Yes.
You know, some biometric piece of data.
But what will happen to the smaller banks that will lose their deposits? They will go to the central bank. There is no other way. I mean, they will change. The banking system is changing. You know, there will be administration units.
Yeah.
And only the bigger banks will, I think, survive, who are able to borrow and lend and do investment banking. But it's a complete change to the banking system.
Yes and no, in that I think that banks have had to adapt over the centuries. Different products have been required at different times. So there was a time when a lot of banks made much of their revenue from storage of various things, whether it's gold or artwork or whatever. That's largely disappeared. So banks have to evolve over time. I think that if, you know, with the emergence of centrally governed digital currency, banks will have to evolve. They'll have to innovate with new ideas. I don't agree that all small banks will necessarily have to go out of business, but they will have to evolve.
Yes.
But all industries have to evolve.
Yes.
But again, I do want to make the differential. I'm a great advocate of finding something better than cash and credit cards.
Yes.
I'm not an advocate of Bitcoin. And I think that Bitcoin has happened for reasons other than the positive reasons for a digital central currency.
Yes.
So, and I would like to see further regulation of cryptocurrency in its current form.
Yes.
I think it's quite dangerous, actually.
I think this is a very interesting discussion and could be going for
many hours.
But I will ask you, let's say, the one for the road question.
Sure,
you know.
go for it.
Is the central bank digital currency,
Yeah.
say central bank digital euro,
Yeah.
digital dollar.
Yeah.
Now there was a war, we know who rules the USA. In the European Union, we have the euro
Yeah.
for certain countries. How is the euro going to be affected by the creation of the central bank digital euro? In what way do you see that the euro as a currency will be affected? Will still be there, or will it be only for a few countries? Will it strengthen? Because this new system really is for the bigger people to survive.
I don't agree with that. I think that increasingly currencies are moving away, or countries are moving away from cash.
Right.
So, for example, Sweden, I haven't been to Sweden, but I understand in Sweden you can almost live without cash.
Yes.
In the United States, where I live, you can't. There's still a lot of things that you need cash for. And so in many ways, America is behind some European countries. No, I don't think that, I think the adoption of a digital euro, if and when it happens, will be distributed through the same mechanisms through which the euro currently exists. So certainly if we can go from having 27 currencies, or roughly 27 currencies, to one currency, if we can deal with that operational logistical issue, I think it'll be a lot easier to disseminate a digital currency, actually. I think it'll be easier.
Yes, the objective of the Eurozone was to bring people together, is nothing but a ground for a quicker and cheaper exchange of payments.
Yeah.
To do that, you need banks. If the idea of having a central bank digital euro is for the bigger banks to control the situation, some of the smaller countries don't have these bigger banks. That would be the problem, I think.
That's a very fair complaint, but that's no different to where we are now.
No.
Nor is it any different to where we were 50 years ago. So, and what I'm saying there is that
it's the law of the jungle. The stronger one wins.
It is a law of the jungle, but what I worry about is that the law of the jungle in the case of banking is, I don't like the power the big banks have amassed over the last 30 or 40 or 50 years. Eugene Fama, a great American economist, asked once, are banks special? Simple question. Are banks special? Meaning, should they be regulated in a different way to a supermarket or a gold mine or whatever? And I think they are special because banking affects everything else. It affects a grocery store and a hotel and an airline. And so as a result, the idea of privately owned banks is a very morally problematic question. Because on the one hand, you might say, well, we must make sure that there are always banks, because if a bank is to collapse, that would cause social chaos. Okay, I accept that. But if you're publicly guaranteeing the downside, then surely the public must reap the upside. And instead what we have in the banking system is private upside and public downside. And that's a moral quandary that we have never been able to solve. And going back to your original question, Costas, the bigger the better, because what a great business. Public downside, private upside, let's get bigger and bigger and bigger. So we have probably 10 or 15 or 20 banks in the world right now that they can act as irresponsibly as they like. They're never going to be allowed to go bankrupt, unfortunately.
Yes.
And what you're alluding to only exacerbates that issue.
Yes. Well, I seem to have run out of questions.
Already.
But I'm sure you want to add something that you would like to express an opinion on the basis of what you do in your, I'm not going to ask you to predict, but how is the situation in New York regarding this sort of business, the alternative investments? Are there more and more people getting to grips with this, or only the big ones will survive?
I think the central challenge that I would pose to investors today, whether they're retail or professional or institutional or whatever they are, is they must come to terms with the fact that the years from 2009 to 2022 were not the norm. And therefore, because that was 13 years of zero interest rates, that's not the norm. So I don't make predictions about equity markets or any other markets, but I have a high confidence of saying that the next 13 or 14 years will be far more difficult for traditional investing than the last 13 or 14 years. And as a result, I feel very, optimistic is a dangerous word. I certainly feel that people like us will add value in the next 5, 10, 15 years, because the returns that investors have come to expect from traditional investing, I don't think will be what they were in the last 10 or 15 years.
Well, Jeremy, thank you very much for coming all the way from mighty USA to us here in Cyprus, part of the European Union. It was a great joy for me to see you. I enjoyed the discussion, and I'm sure the viewers, and we will do it again.
I hope so. It's an honor to be here. I'm very proud to be here.
Thank you very much.
Thank you very much. Thank you.